Welcome back. In today's video, we're continuing our deep dive into NIO and unpacking what's behind the stock's latest move higher. After a bit of a pause late last week, NIO came out strong today, closing up nearly 3% to finish at $4.52. And while that might not sound like a huge jump at first glance, when you look at the volume, momentum, and broader narrative surrounding this stock right now, you start to see a more compelling picture forming. Let's start with the numbers. NIO traded almost 59 million shares today, well above its 50-day average. That's not just retail traders having fun with a meme stock. That's serious engagement from across the market. And it shows that, despite their ups and downs, there is real investor interest here. This wasn't just a bounce on no news, it was a continuation of a story that's been slowly gaining traction over the past few weeks. So what's behind this renewed confidence? Well, a big part of it comes down to what Citi analysts have dubbed their 30-day catalyst watch. They're expecting a number of events, vehicle launches, technology rollouts, and updated margin numbers that could move the stock in the near term. And they're not alone. There's growing belief that NIO is about to shift into a higher gear. The pieces that seemed scattered 6 months ago are now starting to align. First, let's talk about the product pipeline. NIO isn't standing still. They're pushing ahead with the Onvo L90 SUV and Firefly compact model. These aren't just new cars, they represent an expansion of NIO's footprint. They're going after the mass market in a way they hadn't before, and if they can pull it off, they'll unlock new revenue channels while building brand recognition outside their premium niche. Citi analysts are suggesting that NIO could launch up to 10 new models by the end of 2025. That's an aggressive roadmap. But if executed well, it positions NIO as more than just a niche luxury EV player. It becomes a serious contender in the broader EV ecosystem, one that can challenge XPeng, Li Auto, and even Tesla in key segments. But product alone won't carry a company. What's turning heads right now is the shift in financial performance. In the first quarter of this year, NIO posted gross margins of 10.2%, that's a solid improvement. Gross profit jumped 89% year over year. Revenue rose 22%. It's not profitability yet, but it's a sign that the company is starting to dial in its cost structure. They're cutting R&D spending, tightening administrative expenses, and aiming to run leaner while still delivering innovation. And if you've been following this channel, you know we've been tracking that closely, especially in the context of their long-term goal to hit break-even by Q4 of 2025. That goal still holds. And now it looks a little more realistic than it did just a few quarters ago. And then, of course, there's the infrastructure angle. NIO's battery swap network continues to be a quiet force behind this rally. Over 3,100 stations are now active across China, and around 20% of them have already reached break-even. The ones in Shanghai are reportedly already profitable. Add to that CATL's recent investment in NIO's battery swap venture Miratari, and you start to see a strong foundation being laid. That's infrastructure other EV makers don't have. This isn't just about convenience for drivers. It's about recurring revenue, customer loyalty, and a potential long-term moat. If battery swapping takes off, especially in Europe or future US markets, NIO could find itself with a unique edge that's tough to match. Now let's touch on the short interest, which hasn't gone away. We're still looking at nearly 10% of the float being sold short, with rising borrow fees and steady daily volume. If NIO keeps pushing higher, and particularly if it breaks through any key technical resistance, it could trigger a wave of short covering. That's a real possibility. And while it hasn't fully played out yet, all the ingredients are still there. So as we head further into this week, what should we be watching? First, keep your eye out for any updates on pre-sales for the Onvo L90 or new vehicle rollout announcements. Second, any financial guidance or operating updates from the company, especially tied to margin improvement, could be a spark. Third, expect more analyst activity. We've seen some institutions start to turn bullish again. That momentum could build quickly if NIO delivers a few more green sessions. So where does this leave us? Today's rally wasn't just a fluke. It was a continuation of a slow but clear narrative shift. NIO is starting to look more credible. Its infrastructure is expanding. Margins are improving. New models are arriving. And the company has a strategy that feels more cohesive than it has in a while. Now, that doesn't mean this is a guaranteed winner. There are still macro risks. There's still execution risk. And the EV market overall is maturing, which means higher expectations and less room for error. But if you're looking for a stock with turnaround potential, with real assets behind it, and a roadmap that's starting to take shape, NIO is very much in that conversation. Thanks again for tuning in. Let me know in the comments what you think about today's rally. Is this the start of something bigger? Or just a blip on the radar? Either way, I'll be watching closely, and I'll be back soon with more updates as we track NIO's next moves. Stay sharp, and I'll see you in the next one.